Hey, I hope you're all doing well. This is your May market review. So the reason that I put these videos together each month is to give you the straightforward information with no media spin, political angle, or fear tactics that media outlets use to get more viewers to watch their shows. My goal with this is to give you the straightforward information about what's going on in the market and the economy, and ultimately then how that affects your money. Stocks for the month of May were roughly flat across a lot of different indices. The S&P 500 was up only about 0.5%, which it can move that much, within a few hours. The NASDAQ 100 was down just over 1%. Small cap stocks were flat for the month, just about. Stocks are still, though, right at all-time highs, which you can see reflected within your accounts. There's a slight bit of volatility based around concerns of higher inflation earlier in the month of May. The concern was quickly brushed away, though, by the Federal Reserve, which basically said that this was a temporary move with the economy reopening, with inflation going higher because of that, and just kind of some supply-demand imbalances that are happening causing inflation to go higher. Remember, inflation has been a major concern and topic of financial pundits and media figures with extreme political biases for over a decade now. I know there's a lot of concern that the media is spinning up right now. I see it literally every day. There's at least a couple articles in the Wall Street Journal that are highlighting something talking about inflation. So I know that if any of you were following the news at all, you're definitely seeing it as well, with talks of shortages in the semiconductors that are chips that are put into computers, lumber shortages, all kinds of different supply-demand imbalances that are going on. Check out this chart, though, that I came across. This is showing actual inflation from 1970 through today and the Fed's forecasted future inflation. So these are the facts. The last decade, despite all the government stimulus from the Great Recession of 2007 through 2009, inflation was not able to consistently stay above the Fed's target of 2%. So despite what all these extreme political analysts out there will talk about with of course all this government stimulus and free money is going to lead to this dramatic inflation, it didn't. So the concern is still there now because of a lot of other issues and the continued issue of oversupply of money into the economy. But it didn't happen before. Doesn't mean it won't happen now, but it's there's that extreme view generally on the extreme Republican side that printing all this money is going to lead to hyperinflation, and that's not the fact. So I want to point that out. I know that a large, central PA which is where most of my clients are, largely, very conservative area. And I know, because I've heard from a number of you that those are some of the concerns that you have. I want to just put the facts out there for you guys. So show you some graphical info there that just kind of debunks, some of that narrative that conservative media has been throwing out there, especially recently. So historically, inflation is averaged right around 3%. To give you kind of a point of reference, I know that chart, put it up there again, they're showing all the way back into the 70s, which showed those extreme spikes in inflation. So that was, which a lot of you can remember, was definitely not a great time, because there was not only high inflation, but then to combat the inflation, there was then high interest rates. So typically, though, over the last 100 years, the average for inflation is right around 3%. A couple charts that I came across this past month that I thought would be interesting to go over and talk a little bit more about. The first one I'll pull up talks about groups who own U.S. stocks. So I thought that this was interesting because I was surprised with how much foreign ownership there was in stocks, but then, kind of quickly thought to myself, I'm like, well, the U.S. is looked at as one of the most stable stock markets out there, so it's not surprising that there is so much foreign ownership. But one thing that I wanted to point out was the taxable accounts. So that was something I talked about last month when President Biden had brought up raising the capital gains rate for the top percentile, or the top income earners out there, to match the actual taxes that they're paying on their income, which hasn't typically happened, but it would put their capital gains it would increase it from 20% for the highest income earner all the way up to like 40%. So that would be a segment of the market, that 9.5 trillion, that may be ruffled a little bit with that potential coming out there, because if they do end up enacting that, then there could be potentially a lot of selling to lock in some of those long-term capital gains, so that way they can realize a lower tax bracket. Although Democrats have also talked about making that retroactive, which would kind of negate that potential selling there. So something interesting I thought to kind of point out. 30% of it being the U.S. stock market being in retirement accounts, which generally retirement accounts are long-term accounts. So you're not going to see nearly as much turnover typically in a retirement account, meaning how often somebody's actually trading that, how often the whole portfolio may be turned over or sold, versus a taxable account, which there may be a little bit more movement going on within there, especially with fun stuff like AMC and GameStop shooting to the moon, along with some other meme stocks out there. Beyond Meat being another one that's really starting to taken off. Beyond Meat, if you don't know, is like a vegan like meat company. They'll make like fake sausage and chicken and burgers and stuff like that. So if you're trying to dive down that way, check it out. But the stock has taken off recently with AMC and some other stocks that are considered your meme stocks, that aren't really moving on any sort of fundamental movement, but they're moving more on just Wall Street bets and Reddit traders that are just pushing the idea of buying these stocks ultimately, and they're getting a big movement behind it because there's a lot of them that are on there. So interesting to follow, but probably not the best long-term investment strategy. The next chart that I have talks about small business openings that are available. So these are job openings that just can't be filled right now, and it's at the highest level going back through 1975, actually even before that, but this chart just goes through 1973 actually. So it's interesting, all those gray lines on there, those are different recessions, and typically during a recession, job openings go down because businesses aren't doing as well, therefore they're not hiring as many people, and really, if anything, they're laying people off. What was interesting to see, and this was in part because of all the government stimulus that was out there for not just businesses but individuals, that these businesses are not only doing really well and trying to hire more people, but because of and that's on the side of like things like PPP and keeping businesses going with some of that government stimulus, and depending on parts of the country, having some of those business being open sooner than later. But on the individual side, with all the government stimulus that was given to people and the unemployment benefits that have been given to people, that now is starting to be kind of at least turned around to incentivize people to go back to work. But because of all of that government stimulus in place, with the not just the stimulus that they were given, but the unemployment that they were given as well, that's near 45%, which is crazy high. Obviously, you can see based on the chart. Also a really good sign though for the economy, because that means that small businesses, which make up the large majority of jobs in our country, that those businesses are doing well because they need to hire more people. So problem with it is that they're not finding enough, clearly based on the numbers. That'll be something probably throughout the next few quarters that'll be worked out more, because of just kind of everything getting reopened, and people now with benefits being pulled back, having to go back to work, versus before that they were able to just not work, or at least not work officially, so that way that they could collect the unemployment and make money under the table. And that was definitely something that was probably more predominant. But I thought that was a really interesting chart, just to kind of see that. It also ties into a little bit of the inflation conversation that's going on, because one of the things that these small businesses will start to have to do is actually potentially pay these people more money, which will drive up the the rate for wages, which isn't necessarily a bad thing, but then that drives up the price for the products and services that those businesses are providing. So, that's where that debate over, inflation kind of, one of the points that's made out there. So, but this is probably a little bit more of a short-term thing that'll correct itself here over the next few quarters more than likely. But it's interesting because, how this will affect the overall stock market, which is more what I care about, and I know what you guys care about because that's your money. With more and more people making more and more money, that's going to help drive up prices within the market, even though there may be these little short-term scares within the market of inflation potentially going higher in the short term. Quick update on the new client portal. I know I talked last month in the market review about the new client portal coming, and it's all ready. I've actually, for those of you that are letters A through K, you would have gotten 2 emails from me. I believe it was last Friday, May 28th, with links to set up both either the desktop or mobile version or both, depending on what you prefer. If you like using your phone or tablet, the mobile version is good. If you're on your computer or laptop, that's another option as well. But those links are out there for you guys to get onto that. I'm going to be sending out the rest of the alphabet here later on, probably today. It's June the 2nd on a Wednesday, so I'll probably be getting those out to you, as well as I'll get this market review out to you guys as well today. The other updates that, or I'll tell you kind of some of the features of the client portal. So versus the old client portal that we had, I know a lot of you, you guys probably just used advisorclient.com, which is TD Ameritrade's website. That's fine. It'll show you your number and your account balance and statements. So what the client portal now is going to be able to do is, pull in all of that info and more. So there's a mobile version for it, which we didn't have before. There's more charts, graphs, info, to see how your accounts are actually performing. For those of you that, have done a financial plan with me, you'll be able to see that confidence meter from the financial plan with MoneyGuide Pro. That'll be linked into the client portal. I believe that's only on the desktop version, but you'll be able to see that on there. There's also a client vault where I'll be putting quarterly investment reports like the ones that I do when we do a one-on-one investment review. So there'll be a folder within your client vault there. Also, your TD Ameritrade statements are going to be in your vault as well. So you really, you can keep going on to Advisor Client to look at those, but they'll also be in your vault. So as well as, in the future, I'll put tax documents in there next year. There'll be a folder for that when tax documents come out again for next year. If you'd like to upload documents that, would be important to have in a secure place, whether you want to keep that private or you want to share that with me, this is the place to do that. So things like your will, power of attorney, any other legal documents, financial documents, if you want to just try to organize your financial life, that's a great place to do it. So that way everything is kind of all in one place. I'm doing it that way so that it's something that'll actually, instead of having multiple different logins and checking your account here and an investment report there, it's all in one place. I'm also probably later on in June here or early July, I'm going to be adding another account link to that, to where you can actually tie in outside accounts. So like if you have a 401k at an employer and I help you periodically kind of update that sort of stuff, and you want to just tie that in, we can tie that in. Now it won't be able to pull all of the performance from the past, but it can put together the performance from the date that you link it going forward. So that'll be another little feature that is will be cool to have. So that way you can see all of your investments, whether they're managed by me, directly through TD Ameritrade or indirectly with a 401k plan outside. You can pull all of that stuff in there, and it's another way that then when we get together, we can have a more involved conversation about how all of your investments are doing, and you can then see all of the performance of it, and we can talk a little bit more in depth at that point about how everything is doing in your financial life. So look for that here for the rest of the alphabet if you haven't already gotten that link. If you have gotten the link, go through, set that up. If you have questions, don't hesitate to reach out to me. I'm happy to help you with that. The next round of in-person investment reviews I'm going to have is this month, so the month of June here. If we didn't get together in April and you'd like to link up this month, please reach out to me if I haven't already scheduled you. If you'd like to do a Zoom meeting, the first part of the month I'm pretty busy, but at least for the first 3 weeks, but I'm happy to, towards the end of the month, schedule a time to do a Zoom investment review if you'd like to do it that way. Zooms are always generally a lot easier for me because I'm able to just sit here at the office and do it versus, driving around in a car. But happy to link up with you if we haven't done a in-person review in a while too, so just let me know. If you have any questions or need any help with something, don't hesitate to call, text, email, client portal, investment related, financially related. Don't hesitate to give me a call, and I'd be happy to help you out with where I can there. If you have friends, family members, or coworkers that you think would be interested in having a conversation with me about their investments or anything kind of financially related, please don't hesitate to give them my info. I'd be more than happy to have a conversation with them, and if they'd like me to reach out to them, get me their info, and I'd be happy to reach out to them and talk more. But I appreciate you guys all taking the time to check me out. Until next time.